is there a message in the bond market for the guys long equity markets at the moment? Is there anything to take away from what's happening?
So I think the bigger problem on the long end of the yield curve is you still have lots of central bank liquidity around the world. Even if the U.S. is pulling back, you've got Bank of Japan still pretty much expanding their programs. ECB is very involved. And you're not seeing global central bank purchasing kind of winding down. In fact, it's still pretty strong. So that's affecting the long end of the yield curve, particularly in the U.S., because the U.S. is an attractive bond yield relative to other parts of the world. JGBs are almost zero. The bond yield is 0.4, 0.5, and the U.S. is giving you 2.4 or 2.35. That's pretty attractive still for foreign investors.
But that creates a really difficult problem when it comes to value versus growth, because you have financials like rising yields, and they're the value play, but then growth is all about technology, and they do well with a weaker dollar. So both of those stories make sense right now.
So the question is, where are we going to be, not today, but 3, 6, 9 months from now? To me, that's much more important than trading the next couple of days. And in that case, you're looking at most economic indicators telling you that we're going to be getting continuous growth into next year. There's even some indication that wage inflation is going to be coming back. You've heard a lot of companies talk about tightness in the labor markets, but some of our predictors looking at the gap between the U6 and U3 unemployment data also is indicative of probably something like 3.5% wage increase at this time next year versus 2.5% today. That, I think, will affect the bond market irrespective of some of these issues that we're talking about. We're talking about more technical. The fundamental things tend to be more important as you look out 3, 6, 9 months. That, I think, changes the entire nature of the market, because when bond yields go up, value does better and growth starts getting into some trouble. But investors are so caught up in momentum today. They're looking to, just chase that winner and sell some of the losers that might work a year from now. But if it doesn't work in the next 3, 6 months, I may not have a job as a fund manager. So it's nice to talk about a year from now, but it's not particularly relevant.